Visible for everyone?
Yes.
Yes.
Okay. So actually, most of people know that we are into a business for the last 17 years, and currently we are handling 200 plus clients, and we are having our existence in 16 cities across the country. And we are doing a pan India services, and we are also undertaking certain activities across in globalized for 5 countries. And we are ISO 2000, 27001 certified organizations, and we ensured the data security was most important thing, and we have been certified for that. And we are processing approximately 1 lakh payroll records per month. And for TDS reporting, we will process approximately 12 lakhs entries per quarter. And our accuracy rate every time it would be 99.49 percentage. And this is what we are maintaining the accuracy rate for the last 17 years. And every year we will issue approximately 5.73 lakhs Form 16s will be issued from relativity to their clients. And the most important thing is in the last 17 years, the retention rate of the client, it is around 99.69 percentage. And we can tell it as a proud, very proud, because based upon the client's experience and other things, the retention rate that we are having is too high. And it has been consistent for all the years. So, and I want to tell about the enterprise clients we are handling it. So we are handling Cisco, Infineon, Hyundai, Royal Enfield, Hindu, Kennametal, LG, Max Linear. Those are the sessions. Those are the enterprise clients which we are handling it. And the mid-size clients currently we are handling it as it's a BBCL, Covey.co, Blue Binaries, Xtiro, Pioneer, Responsive, Carblane, Augusta. These are the some of the key clients which we have been handling for more than 5 years, something like that. RPM, Texmo, Vehicle, Namecheap, Vertical, AppX, Tremco, and VCPL. These are the clients that we are handling in the mid-size. And what we are doing currently is this is the core service that we are providing, and we are processing a payroll compliance, and we will take care of it. TDS compliance, here we will take care of TDS reportings and necessary and certificate issuance, and everything will be taken care under the TDS compliance. And local labor compliance, we will undertake. HRMS tool, Great HR is our technological partner. So with the help of them, we will have the HRMS tool, and we will help all our clients to do it. And next is a compliance tool to handle the PF and all the statutory compliance. We are having our own tool. Through that, we will ensure that all the compliance activities have been completed within the timeline like that. And the next one would be the HR consultations. We will provide the end-to-end HR consultations to most of the to the organizations. And also, we will undertake audits in HR, payroll, and compliance audits. Also, we will undertake, and we will address the gaps and provide the recommendations towards. In payroll processing, I just want to tell you what and all things that we will cover as a basic. We will do the payroll management, that is end-to-end management. From after we receiving the input, we will process and provide the necessary reports to the clients. And we will take care of a payroll compliance. Here, the payroll compliance will means PF, ASI, PT, those kind of LWF complaints and all. We will undertake it, and we will provide an employee self-service tool. And also we will, in the payroll, if there are any reimbursements and expense management which has to be maintained, that also we will undertake it. And we will also do the payroll consultations, payroll audit assistance if it is required. And we will provide the standardized reports. If there are any customers, they require us customized reports in their format, that also we will provide it to. And we will have a help desk through which we will handle all the queries. So all the queries that we are receiving it from the clients' employees will be routed to the help desk, and it will be addressed within the timeline. So these are the things that we will undertake under the payroll processing. And in a payroll compliance, as I mentioned earlier, for PF, ASI, PT, LWF related, all the filings and the governance activity that we have to undertake, those things we will undertake it. and we will do the statutory filings, and we will do the statutory consultation on that, and we will undertake a statutory audit. And smart operator is the tool that we are using for the compliance activity, and this is a relativity's own tool. So for compliance also, we have a separate help desk. In that help desk, via help desk only, we will address all the employee related queries. And next one will be a tax compliance. In the tax compliance, it is a customized service that we will provide based upon the client request. So we will undertake the QTDS filings. That is the regular filings. We will do the reportings and everything. And we will undertake the correction filing if there is a necessary. And we will address the demands and notices which are available, which are raised by the traces. And we will issue the Form 16A and 16. And we will undertake the investment proof declarations, TDS audit assistance, TDS consultations, and queries via the help desk. This audit assistance and investment proof declarations is a separate customized package based upon the client requirement that we will do it. And next one would be a LLC compliance. So in the LLC compliance, we will maintain all the registers and documentations, and we will do the periodical filings. What all filings has to be done in a half yearly basis, annual basis, those everything that we will undertake it. And we will, if there are any inspections or any visits from the labor department which has to be done, we will provide the assistance over that. And the labor registrations, and if there is any amendments that we will undertake it, and CLRA also. We will take care of the POSH compliance and the Apprenticeship Act. The compliance has to be followed on the Apprenticeship Act also, we will do it. And if there are any legislative updates, that we will provide updates to all our clients. And with respect to HRMS tool, the modules that we are, it will be there itself, onboarding an employee. From onboarding an employee till exit management, the journey will be undertaken throughout the tool itself. It will have a core core HR, so that we can maintain all the documents of the employees, and leave management, attendance management can be undertaken via the tool. Payroll, performance management, and business expenses claims, if there are anything which is going to be happen, that we can able to configure based upon the client requirement itself. And then the compliance tool, there will be compliance management will be, we will do it. And employee query management also will be undertaken via the tool. And we will send out if there are any activities which is there, the automated reminders and alerts will be shared to everyone. And we will undertake of audit assistance, and we will do the consultations and consultation work if there is a required. And knowledge hub will be there, and employee queries will be handled via the compliance tool itself. There is a help desk option. In that itself, it will be undertaken. And the next one is the Apprenticeship Act compliance. So employers, so we will undertake we will undertake the activities which will comes under an apps and NATs. So we will take care of all the activities in the portal, and we will file the reports, and we will file the returns based upon the Apprenticeship Act requirements. So, and these are the add-on compliances that we will do it as a separate package. That is a POSH compliance, we will do it. Shops and Establishment Act alone, and the same way the Apprenticeship Act, CLRA compliances, and Code on Wages consultation also we will do it in align with the new labor code, and the salary restructuring. And we will provide a HR consultations and advisory, and DPDP Act. So the Data Protection Act will be effective from the April, right? So related to that act also, we will provide advisory to our clients. So this is all about the relativity. So then we can move about the today's agenda. Today's agenda, what it is, we have already seen about relativity, and now we will see the overview of an Income Tax Act 2025. What is that? And we also see about how the new tax regime has been changed, if there is any change or not. And then we will look into about the TDS or TCS provisions has been defined under the Income Tax Act 2025. The final would be a Q&A session. In mid of anything, if you have any doubts, please put it in the chat box. We will discuss each and every questions at the end of the session. So before going in detail into a session, we just have a participant poll. I am just running a poll. Kindly provide your responses. So based upon your responses, I can able to understand the participants, participant who and all have been participated. So how I can take it further like that. So your responses are most required. We have received 20 percentage of responses. I would request others to submit the responses as early as possible. We have received around 80 percentage of responses from all the participants. Still, we required it from few people. Kindly do the responses so that it would be easy for me to understand the participant from which industry they have been belong to it and in which size of the companies that they are belonging to it, so that it would be easy for us to understand the participant history. Still, I'm closing the poll. Thank you for your responses. Okay, I we it is belongs to mid-sized because we have received 30 percentage of participant from the HR, 35 percentage from the payroll, and 35 percentage from the compliance team. So they are the participant from each and every department. It has been scattered. So thank you for your response, and we will go into the today's detailed session. So as you are aware, right, from the last, I think, in the February 2025, while presenting the budget for the financial year for 25-26, there is also a proposal which has been provided by the CBDT to the CBDT that income tax would be changed. So the Income Tax Act, which we are currently following, which has been initiated in the 1961. The act has been created in 1961, and it's a 60 years old act that we are following it. In the last financial year, in the last budget proposal, the CBDT has come out with a new act, Income Tax Act 2025. So this act would be effective from the 1st April 2026, and it has got and the bill has been already passed in the Parliament in August 2025 itself. So from 1st April 2026, the act that we are going to follow is Income Tax Act 2025, not 1961. So till 31st, until 31st, we will follow the 1961 Act, and after that, it is 2025. So the major objective goal to implement this act itself, because in the earlier act there are so many exclusions and the clauses have been added on each and every category because of the change in the environment, infrastructure like that, and they want to extend the certain more benefits to all the individuals, taxpayers. So to make it simplified and to be modernized, and they want to make it more simplified without the complications, they have been come out with a new act, and in this new act the major change with respect to this, there is a change in the section and how the act has been structured earlier and now it has been structured. So in the new act, the sections has been changed. That is a major thing. And the structurally, what and all things has been reduced. No, in the new act, while compared to the current act, no, so I have come out with certain comparisons. What like how many sections was earlier there, and now how many sections would be there in the 2025 act. So if you see, the number of sections have been reduced from it is earlier it was more than 700, but now it is going to be reduced to 536. It is really easy, no? So there was approximately 170 related sections are going to be removed. The sections are getting down, And the chapters which is going to be continued the same. Earlier it was 23 chapters. Now also the 23 chapters will be continued, and the schedule also going to be the same. There is a slight increase in the schedule numbers. Earlier it was 14, now it was 60. And the content in terms of pages, 823 was the earlier number of page. The Income Tax Act 1961 has 823 pages, but 2025 has 622 pages. Nearly 200 pages have been reduced. And effective date is, as you are aware, 1961 will be applicable until 31st March, and from 1st of April 2025 Act, which we have to follow. And also in the major structure change, right? Earlier, whenever there is additions towards any sections, for example, they have introduced the new pension scheme, right? National pension scheme has been introduced. While introducing that section, they have added as a ATCCD as a section which has been introduced. Whenever there was a new section has been introduced, there will be alphabetical order, alphabetical numbers will be added, right? But in the new act, there is no alphabetical additions. The sections has been written as 1, 2, 3, 4 like that. So here there is no ATC, ATD, 80DDA like that. And then with respect to TDS 194A, 194A, 194C, 194J would be there. So in the new act, it has been redefined. There is no alphabetical will be mentioned. So these are the structural changes with respect to the new act comparing to the old act. And next one, this is another concept. Earlier in the existing act, right, there is a financial year and an assessment year. But in the new Income Tax Act 2025, there is only 1 year which is a tax year. There is no financial year, there is no assessment year at all. So this tax year would be a 12-month period for which I'm earning an income and reporting it. But with respect to the old law, for the assessment year, the assessment year follows the next year when the tax is going to be computed. For example, if I'm earning an income for April 25 to March 2026, the assessment year would be April 26 to March 2027. So the assessment year would be a next following year of the financial year. That is what we are practicing it, right? Uh, this is what in the old law. But in the new law, only tax year would be there, and the filing period also, once the tax year is completed, then the subsequent year we have to file it. So this provides a more clarity with all the people who are going to file, the new age people, right? While they are doing the individual returns, individual tax filings. Now, because everything has been automated, most of the peoples are doing their filing on their own. So this will give a more clarity to everyone, and they will not get confused with respect to the financial year and then assessment year. So going forward, there will be only 1 year, that is a tax year. The tax year is 26-27, means this is for the period April 26 to March 2027. This is an example just I have mentioned here. And in the next slide, so when there is a change in the act, first thing we will look into it, right? If there is any changes with respect to the due dates. But in the new act also, there is no change in the respect to the due dates, whether it may be a payment or maybe a reporting or the individual tax returns filings. So the due dates is going to be the same. For TDS payments, it's subsequent month 7th. And TCS also subsequent month is 7. The same will be continued in the new act. And with respect to the income tax returns filing, for individuals, this is a 31st July is the due date, right? The same thing will be continued. There is no change in the due dates in the existing due dates. And there was one major thing in the old act is new tax regime. Nowadays, most of the people, individuals are opting for new tax regime because it has its own benefit. The tax rates are lesser, and we don't have any other exemptions like that. So in the old act, under section 115 BAC, the new tax regime has been defined. But in the new act, it will comes under the section 202. So the new tax regime will define and will comes under the section 202, and it would be effective from 1st April 2026. As it continues, by default, the default regime would be a new tax regime. If an individual wants to opt out for old tax regime, If when I'm working in an organization, I have to do a declaration, some declaration to my employer in start of the financial year. And if I after that, if I want to make any changes, that can be done while I am doing a income tax returns filing. So this is a default regime, which will default option will be followed for the calculation purpose. And eligibility in the in the 1961, in the Income Tax Act 1961, new tax regime is eligible only for the peoples, individuals and HUF. But in the new act, it has been, the benefits has been extended to the other peoples also, like for association of persons, body of individuals, and artificial judicial persons. For them also, the benefit has been extended. So the new tax regime would be cover for other more three peoples. And with respect to new tax regime, whatever benefits have been provided in the old act will be continue to be same in the new act also. For example, in the old act, the individual cannot claim HRA exemptions. They cannot claim loss from house property. There is no exemption for the ATC investments. So the same thing will be continued in the new act. Uh, and we can able to claim in the old act, we can claim exemption for gratuity, we can claim exemption for leave encashment, and employer contribution towards NPS. So these are the exemptions that we can claim under the new tax regime, right? That benefit will be continued under the new act also. There is no change with respect to the exemptions and the calculation methodology. That would be continue as the same. So in the major change from with respect to old act and the new act is there is a change in the sections, and certain sections has been rewritten, and it provide a more clarity to everyone. So in this webinar, we are going to more keen about the TDS provisions, because TDS provisions and TCS, there are certain change in the sections, and also the act provides more clarity in the new act, right? It provides more clarity for what kind of payment, how to whom it is applicable. Those kind of clarity have been provided in the act. So I have just come out a brief thing. TDS on salary income. Okay, earlier we will calculate under the section 192, but now it has been rewritten to the section 392. In the new Income Tax Act, under section 392, we have to deduct a TDS on the salary income. So here only there is a change in the section, but the methodology of tax calculation would be the same. So for example, what we will do earlier is, in the start of the financial year, we will get a declaration from an employee for which regime, if they want to go for old regime, they have to provide a declarations, and they will also provide an investment proof, what and all investment plans that they have made, they have for that financial year. We have to collect those informations. Based on that, we will calculate the tax liability, and we will provide the we will deduct the tax in the average rate, right? The same process will be continued in the new act also. So there is no changes in the process wise, but the only changes, section has been changed. From 192, it has been changed to 392. And TDS on other payments. Apart from the salary income, for whatever payments I'm going to deduct TDS, has been clubbed into us, clubbed in under the section called 393. So earlier we had from 193 to 194T. There are so many sections would be there. 193 will be provided for interest on securities, 194A for interest income, 194C for contract payment to the contractors, 194J we will provide it for professional fees, 194I for interest rental income, and we had 194K for the dividend income. Like that, we had so many sections would be there from 193 to 194T. So all these sections have been clubbed, and it has been bring out in a schedule under the section 393. Even if the tax with respect to the non-residents also will comes under the section 393 itself. And the next one would be a collection of tax at source. We will mention it as a TCS, right? So earlier it has been defined under the section 206C. Now it has been defined under the section 394. So if you see in the broader view, in the Income Tax Act 1961, with respect to the TDS or TCS provisions, from section 192 to section 206C, we have to refer. There are so many sections which have an interlink. We will provide a clarity about the TDS and TCS deductions. But in the new act, it's just the simplified, only three sections that we have to refer. So 392 for salary payment, and for other payments, it is 393. And for TCS, it is 394. Only three sections. How easy it is, right? Instead of reading around 13 more than 30 sections, now it has been reduced to three sections. I think we have to thank to tax department so that they have made our life a little more easier. So here, what I'm going to do in the upcoming slides is, we have taken the major sections which has been used repetitively for each and every transactions, and these are the major payments will be happen in most of the companies. So we have taken 4 to 5 sections, and we are going to decode it how it has been different from earlier and now. Okay. So under section 393, there are multiple subsections have been provided. So and 393, the first subsection would be a TDS on commissioner or brokerage. Before getting into detail, I will just provide you the overview of this. So for each and every section, there will be a description of the payment type. So what and all payments will covered for the TDS deduction for this under this category, and payer. Earlier, we will mention it as a deductor, right? In the Income Tax Act 1961, we will mention deductor will be responsible for the TDS deductions. Instead of deductor, here there is a term has been defined as payer. So the payer means who is paying the income to the other person, from whom the amount has been credited to the other person. So the next one is a TDS rate and threshold limit. This is the table format has been provided in the Act itself. So in the act itself, there are so much clarity have been provided when compared to the old Act 1961. Okay. So and also there was a consolidation which has have been happened. For example, in the 1961 Act, if there is an insurance commission, it has been defined under the section of 194D. And the brokerage has been defined under the section of 194H. But in the holistically, if you see, both are comes under the type of both are comes under the category of commission income. But we will have multiple sections for the commission income itself. So those kind of things also has been clumped into the same section, and the tax rate have been provided. So for in 393 of 1, under 1 subsection 1, the first one is would be a insurance commission. If there are any insurance commissions have been provided, if the payer may be any person, either maybe an individual or a HUF or a company, firm, association of person, whatever the payer may be, the taxes has to be deducted at the rate of 10%, and the threshold limit is 20,000 rupees. So this is how we have, if the threshold limit is more than 20,000 rupees, if I'm going to make a payment more than 20,000 rupees in a year, then I have to deduct the taxes at the rate of 10%. And there is another subsection, it's a 2. Any income by way of commission or brokerage, apart from the insurance business, if they am getting any other of commission or brokerage means, and if the payer is a specified person. Here, in the upcoming slide also, I have mentioned the term as, the Act has mentioned the term as specified person. Who will comes under the specified person means uh, all the category of peoples, like company, firm, association of person, AOP, trust, judiciary person, all the category of people will come, excluding individual and HUF. So HUF and individual will be excluded. But in certain conditions, for example, if an individual who is running a business, and if their turnover is more than 1 crore in the previous tax year means, then they are also eligible to deduct taxes. So they will come under the specified person category. And if they are providing a professional service instead of business, if they are providing a professional service and their income is more than 50 lakh in the last year, in the last tax year means, then they will also have to deduct the taxes if they are making any payment to vendor as a commission or a brokerage. So here the specified person means, first we will exclude individual and HUF, and if this condition has been satisfied, they are also responsible for the TDS deductions. So for these kind of payments, we have to deduct taxes at the rate of 2%, and the threshold limit is 20,000. So there is no changes in this tax rate, but the sections and the way it has been mentioned in the act and the clarity have been changed. So earlier it has been just mentioned as income of apart from if there are any brokerage we have to deduct the taxes, but now it has been specifically mentioned all types of payers will be included, and there is a condition class for individual and a HUF. And this specified person definition will be continued throughout the TDS and TCS provisions. In mid, if you have any questions, please put it on the chat box. We will discuss at the end of the presentation. And the next one would be a rent. So in rent, earlier we had only one section 194I, and if I'm paying a rent to my landlord more than a 50,000 per annum, if it is more than 50,000 per month, we have to deduct tax, right? So this has been consolidated here. So there are two subsections have been provided. So any income by a way of rent, person other than specified person. So if I'm not a specified person, for example, I am an individual and I'm not running any business, or I'm not providing a professional service means, or professional service, and I'm paying a rent more than 50,000 per month. In that case, then I have to deduct 2% as a TDS, and the remaining part only I can transfer it to my landlord. Here, in the previous act, the threshold limit have been defined for the throughout the year, but in the new act, it has been mentioned for the month. So 50,000 per month are a part of a month. If for example, if I'm getting a rent invoice, 50,000, either for 15 days or for a 1 month. If it is more than 50,000, then I have to deduct the taxes. And if I'm a specified person, then 2% of TDS is applicable for plant and machinery, and 10% of TDS is applicable for the land and building. And there is no change in the threshold limit for both the things. And the next section would be TDS on interest income. So it has been defined under the section of 393 of 5 in the new act. And here the consolidations have been made. Earlier, there was a section 193 and there is a section 194A for the interest payments. So these two sections have been clubbed and it has been comes under the section 393 of 5. If there are any income, if there are any income from interest on securities, the payer may be any person. He is eligible to deduct taxes at 10% if the threshold limit, and the threshold limit for this tax deduction is rupees 10,000. So there is no change in the threshold limit for this particular section also. The same thing would be continued. Only change here there is a section change. From 193, it has been changed to 393, a subsection of 5, subsection of 1, the class 1. Okay. And apart from this, other than interest on securities, in this case, if the payer is a banking company or cooperative society or a post office means, they have to deduct 10% of TDS on the interest income. And the threshold limit here it is, if the individual who is getting the interest income, right, if he is a senior citizen, then the threshold limit is 1 lakh rupees, or else the threshold limit is 50,000. So the threshold limit, there is no change in the threshold limit and the tax rates, but the definitions make it more clearer for each and every one. This payer, they have mentioned in the act, right? That is providing a more clarity to everyone. From that we can able to easily identify who will comes under what. Is it I am applicable to deduct taxes under the sections or not? And next one is in the previous subsection 2, it has been mentioned for the payer have been mentioned for the banking companies, cooperative societies and post office, right? Apart from those payers, if I'm paying interest income means, I have to deduct TDS at the rate of 10% and the threshold limit is 10,000 rupees. So this is applicable from the company perspective. We might have a bonds, something like that, right? For bonds, there will be interest payments on every year will be provided to the stakeholders. So for those kind of payments, we have to deduct a TDS at the rate of 10%. So there is no, for in this particular section also there is no change in the tax rate. Only changes the sections has been changed. And the next section would be a TDS on payment to contractors, fees for professional and technical services. So earlier in the Income Tax Act 1961, for payment towards the contractors has been defined under the section of 194C, and professional and technical service will comes under the section of 194J. But in the new act, this has been compressed. This all the payments will comes under the same section called 393 of 6, 393 subsection of 6 it will comes. So here also they have mentioned what type of payment and who would be a payer and what is the TDS rate and what is the threshold limit. So in the first subsection what they have mentioned is if there is any work which has been carrying out throughout the contractor and it has been a designated person. Here designated person also has been defined in the act. It will also cover central government, state government, and cooperative societies, company, firm, trust. So all these people will comes under the payer category. If you are belongs to any one of the payer category means, and there is a contract for supplying of labor, and it has been clearly mentioned supply of labor for carrying out of any work. So for those kind of service which we are providing, that we are getting, for that TDS has to be deducted at 1% for the individual and HUF if the payment receiver from whom we are getting a service, right? If they are individual or a HUF means, then we have to deduct at 1%, or else we have to deduct for 2% for others. And the threshold limit also 30,000 for a 30,000 rupees, and throughout the year it is 1 lakh rupees. If the payment is more than 30,000 in one transaction, then the TDS is applicable. So for 194C also there is no change in the TDS rate. There is no change in the threshold limit. The same would be continuous. And they have come out for providing the clarity more on it. Here the professional service and the commission income, apart from if you see in the second subsection, for carrying out any work uh, including supply of labor in pursuance of contract by a ways of professional service, or any commission income not being an insurance commission. Apart from an insurance commission, if there are any commissions which has been provided, and in case if the payer is being an individual or an HUF, then they have to deduct 2% of taxes, and the threshold limit is 50 lakhs rupees. So earlier it has not been clearly mentioned for any in individual or HUF to whom it is applicable. In the earlier act it has not been clearly mentioned, but in the new act it has been clearly mentioned. This is how the threshold limit will work. So, and this specific section will provides more clarity about the professional service, technical service, which in align with the 194J section. So, in if we are making a payment of professional fees, technical service fees for a technical service, and the third one is we are booking a, if we are providing any remunerations or commissions to a directors apart from the salary income. So the certain payments that we are making to the directors, right, will not be considered into the salary payment. If we are making any those payments, will be comes under this act. And the fourth one would be a royalty payment. And other than that, if we are making any other transactions for this particular category, if the payer is a specified person, then 2% of taxes will be deducted for technical service, and 2% of taxes will be deducted for the royalty in nature if it is for a distribution or execution of cinematographic films, other than royalty whatever that we are making, right? So those things will be considered as a 10% tax rate. Here for the royalty they have mentioned in the nature of consideration for sale, distribution or exhibition of cinematographic films. For those royalty payments, 2% of taxes will be deducted. And the third one is the payee will engage only in the business of call center. So the payee, if they are only belongs to a operation of call center means, then we have to deduct TDS at the rate of 2%. So in this act, it has been clearly mentioned for 2% for to whom it is applicable, to whom it is not applicable. So that kind of clarity have been provided. And the next one is, other than these peoples in the above, for others, we have to deduct taxes at the rate of 10%. So the 10% of taxes has to be deducted in other cases. And with respect to threshold limit, here the type of payment we are referring. So A, B, C, D, for example, if it is for a fees for professional service, fees for technical service, and the remunerations paid to a directors which has not been considered. Sorry. Third one is a royalty payment, and fourth other payments, whatever that we are making. For those kind of payments, the threshold limit is 50,000. In case of remunerations or commissions which we are paying to directors apart from the salary income, right? For them, there is no threshold limit. Even from the start of the rupees, we have to deduct the taxes at the rate of 10%. So this is how the section 194C and 194J has been rewritten in the new act. And in the next section, we'll just given TDS on dividend. So for dividend, any dividend has been issued for the preference shares has been declared if the pay belongs to a domestic company. So if it is a company in a limited company in India, then the TDS has to be deducted at the rate of 10% and there is no threshold limit. So this is what has been defined in the new act. And we have mentioned only, so for this webinar, we have taken the most important sections that we have been repetitively using in the day-to-day transactions. Most of the things will be happen on contract payments, professional payments, and rent. So these things that we have covered in this presentations. And next we will move to the TCS provisions. In the TCS provisions also, there is no major change in the tax rate and the calculation methodology. The change with respect to the sections have been changed. So earlier it was under the 206, now it has been moved to the section 394. So the tax rates for the sale of alcoholic liquor, tend to leaves and scrap selling, everything is going to the same. If I'm selling the scrap, if a person is a seller, here seller has to collect the tax, right? So they have to collect additionally 1% of tax from each and every individual. And sale consideration, for example, if we are getting a motor vehicle, right? Purchasing a motor vehicle and the sale value, if it is sale value is more than 10 lakhs, then we have to additionally collect 1% of TCS on motor vehicle or any other goods. Currently, motor vehicle has been mentioned, but in future, if government notify any other goods, means that will also get added. And the next one is a legalized remittance scheme. Under LRS scheme, if we are transferring any fund from India to other country through the authorized dealer means, then the taxes has to be deducted. If the transfer is more than exceeding 10 lakhs, then TCS is applicable. If the transfer is making for education or medical treatment purposes, 5% of TCS will be collected. For other type of purpose, if we are making a transfer means, then 20% of the amount has to be collect as a TDS. And the next one is on overseas tour programming package. So most of the people will go for abroad tour, right? And they will take out the overseas tour programming package. In this package, what the expenses included for travel, hotel stay, boarding, lodging, everything will be considered. If in the package what and all have been planned, all the pay expenses will be considered. And if it is up to 10 lakhs, if the program package plan is up to 10 lakhs means 5% of TCS would be collected. And if it is exceeding 10 lakhs means 20% of TCS would be collected by the seller of the tour programming packages. So this is also the same when compared to the Income Tax Act 1961. In 2025 also the same tax rates, the same conditions would be the same. Only the same is there is the same in the sections and in the subsections. So these are the major changes, highlights that we want to that we want to provide it to everyone with respect to the TDS and TCS provisions in the Income Tax Act change. And I just want to give some glimpse about the Labor Act labor code implementation importance, because we just want to create awareness with the people who are getting into our webinar, because everyone knows, right, this labor reforms has been introduced and it has been effective from the November 21st, 2025. So there have been, after that, many notifications, circulars have been issued by each and every department from EPFO, ESIC. Each and every departments are providing a notifications, and we are also yet to avail the rules from the central, and state also have to implement the act, and they also have to subsequently they also have to undertake certain activities. So there is much more importance that is there. So we request everyone to be aligned with the new wage code, and as a we are also helping all our clients and whoever in the other people also to ensure they are aligned with the new wage code. So we are providing a service with respect to undertaking the audit and to understand the gap, and we also provide the necessary recommendations to make it align with the new wage code. So I have mentioned the points which are more important to realign it. The first thing is we have to restructure the wages. Here the wages which I am referring is the wage which we are considering it for PF calculation, the wage we are considering it for ESI calculations, the wage which has been considered for gratuity, leave encashment, maternity benefits. So everything has to be restructured, it has to be recalculated, and the salary components also has to be aligned with the new wage definitions. So in the new wage in the new labor code, wages has been defined clearly, what and all has to be considered as a wages that has to be considered, and based on that the social security benefits has to be calculated. And also with respect to employee documentations, there has been certain norms has been implemented, like mandatorily, like for all type of employees, offer letter and experience letter has been provided. So this is one example I am providing under the employee documentation. There are much more items which has to be undertaken under the employee documentation. And also there is a timely wage payment. So most of the people would have, right, the major impact here it is the employee once released, within 2 days we have to make a wage payment. So under this, it is with respect to wages, like that for each and every type of benefits there is a timeline to make a payment. For gratuity there is a timeline, for bonus there is a timeline. So each and every time, for timeline that we have to make it ensure that the payment has been happened within the timeline. So that is one major area that have to be concentrated. And the next one is adjust with working hours and overtime rules. As per this new code, the working hours there is a cap. Earlier there is no cap have been mentioned specifically, but here there is a cap of 48 hours for a week, and there is a daily cap also, and there is overtime rules also have been changed in the new act. So these also has to be look into it, and take we have to take a necessary action items. And with respect to the social security coverage, earlier social security coverage have been provided to employee, but now it has been expanded to the gig workers and platform workers also. The coverages is expanded for many peoples. And to enhance the workplace safety, there are more than 20 action items which employer has to do to ensure the workplace safety and welfare of an individual's welfare of an employees. And digital compliance system. So here in the new act, most of the registers and everything have been made digitalized. And please be upgrade yourselves and ensure that you have been aligned with the new act. So if you want our support with respect to this labor code implementations, please reach out to us. Our team will get back to you and they will support you on that. So this is all about the today's session. So before going into a Q&A, I would request everyone to provide a feedback poll about this particular session. Um, so I will take Divya, can we run out the feedback poll? So I'm just running a feedback poll. Please provide your response. Based on that, we can make changes based upon your feedback. We can make changes in the upcoming webinars. As you're aware, we will conduct a regular webinars on monthly once. And I will just please provide your feedback. In the meanwhile, I will take out the questions which I have received in the chat box. So I have received a question from Devi. Hi, can you repeat about specified person for insurance company? Companies by default comes under the specified person category. If they are, if individuals and HUF only, there is a conditions. If I'm an individual, if I may be an individual or HUF, in case if I'm doing a business and the turnover is more than 1 crore in the last tax year means, then I also have to deduct taxes. If I'm providing a professional service and if the value is more than 50 lakhs in the previous year, the billing value is more than 50 lakhs in the previous year, then that also has been added for those person also will be eligible to deduct taxes. I hope I have answered your question, Devi. Um, can we get a recording of the sessions? We will share the recording of the sessions to everyone after this. Whether any changes in TDS 195 non-resident sections, there is no changes in the TDS tax rates and the threshold limit type of payments. Only the sections has been redefined under the section 393. So there is much changes will not be there. Contract definition for various TDS sections. Kiran, I am not able to get your question. Can you be specific more? Can you be more specific? Kiran, are you there? Contract or PO is enough. Okay, here the purchase order contract which has not been considered for the TDS sections. In case if any vendor is providing service with respect to the supply of labor, they will consider as a contract. They will come under the contract category. So for those kind of payments, we have to deduct taxes. Either you can have a contract or a PO, that is the administrative thing. So that will not be mentioned here. I receive a question from Sindhuja. Who are specified person for TDS under section 393? Specified persons, company, firm, trust, AOP, artificial of judicial persons, every apart from individual and HUF will comes under the specified persons. In certain cases, individual and HUF also will be considered as a specified person if they have meet out any one of the condition that I am going to tell it now. If they are undertaking a business and there is a turnover of more than 1 crore, if the turnover is more than 1 crore in the last tax year, then they will be considered as a specified person. In case if they are providing professional service, if the value is more than 50 lakhs, then it will be considered under then they will be considered as a specified person. I hope you have understood. Contractor term in regards to 194C and 194J. Here, that term contractor will not define the type of payment or a service. Here, type of service will have to be looked into it to differentiate between 194C and 194J. So 194J, it's already spoke about technical services, and the technical service also has been listed in the Act, and professional service also have been defined in the Act itself. So if there are any type of service which has been provided, if I am receiving any type of that kind of services, then I have to deduct taxes under the section of 194J. And contractors, most of the times it would be different for job work contract. If I'm outsourcing for job work or supply of man chain, will be considered as a contractors. So for them, 2%, if they are not an individual and HUF, 2% of TDS that we will deduct. For others, it is 1% of TDS. In Form 16, capital gain calculation percentage for income above 1 crore. This capital gain calculations, there is no change, but I am, and in Form 16 also, we will not include the capital gain income, right? Because there are, based upon the type of fund, type of asset, the tax rates are different. They have a specified tax rates. So Form 16, the capital gain, Form 16, in Form 16, we will not consider the capital gain income as a income, and we will not deduct taxes actually. 10% TDS on professional service by individual will be continued or change on this? Satish, actually, there is no change. I think my team have already replied to your query. Actually, there is no change in the TDS percentage, and there is no change in the threshold limit also. So we have to receive some more feedbacks from others. Can you provide your feedbacks? So based on that, it would be easy for us to get into next time. We can able to serve you more on that aspect. We value your feedback, and till from the last year, no, based out of feedback only we have come out with every month session and everything. So it's really important to hear your feedbacks. I received a question from Satish. If landlord required to deduct TDS on rental income, how it can be reported by an individual in their ITFI? Landlord is not required to deduct a TDS. When tenant I'm paying a rent, right, I have to deduct TDS while before making the payment. Actually, this practice is there currently also. You know, right? There will be a 26 QB. There is a filing, 26 QC filing that we will have to undertake. If the rental income is more than 50,000 per month, then we have to deduct TDS at 2% for the landlord also. And how landlord can take a tax credit is while filing their IT returns, they have to mention it as a TDS already paid, taxes already paid category. It will be mentioned so that they can able to claim the tax credit back and balance taxes that they have to be paid while filing the IT returns. Satish, if I'm answered your question. So in the meanwhile, Divya have already mentioned that, right? She has been uploaded the blog link and YouTube channel link and LinkedIn. Please get tuned to those links because we will provide an update regularly on these forums. Please follow it and yeah, and please follow it. And she also, and if you want an PPT presentation of this webinar, please drop your email IDs in the chat box. So we have received feedback from all the participants. Thank you for your feedback. I'm just ending the poll now. It's already have been ended. Thank you everyone. I would like to thank everyone who have attended this webinar for your valuable time, and thank you everyone. Hope you have a great day have a great day.